Are you confused where to invest your money, be it in stock, gold, bonds or real estate? Well, this video is just for you because in this video I'm going to break down different type of asset class and explain their risk and return relation. Just a short note that this video is purely for educational purpose. So before making any investment related decisions, kindly consult with your financial advisor. And if you are someone who is new to my channel, then my name is Aman and in my channel I break down financial concepts into simplest way possible. So if you are someone who is interested in finance or wants to learn more about the topic, then you can surely check out my channel. Well, without wasting any further time, let's start the today's video. So moving on to the first and one of the most important asset class is stock. So stock basically represents your ownership in a listed company. So when you buy a stock, you become the part owner of that company. And stocks are risky investments because it is dependent upon a lot of external factors, be it the country's economy or maybe their geopolitical scenarios. And stocks are risky investment in short term, while it is ideal for long term wealth creation. And there are different modes by which you can invest in stock. Maybe you can trade in direct stocks or through mutual funds or maybe through exchange traded funds. And there are two ways by which you can earn income in stocks: when you sell the shares in profit or when the shares pays you dividend. Second, we move on to debt or fixed income securities. So it basically means when you lend your own money to government, to the company or a bank. So debts are usually considered as a safe investment where returns are predictable and risk is low, unlike stock market where return is high and the risk is also high. So there are different ways by which you can invest in debt: through fixed deposit, through public provident fund or maybe through mutual funds. And debts are suitable for investors with low risk appetite or who wants to preserve their capital or those who are pursuing their retirement. Now third is real estate. So real estate basically means the land or the property that you own that can earn you a capital gain or rental income. So real estate are generally considered as a risky investment, considering a large amount of money is being involved in purchasing those land and property, and the return basically varies because it depends upon the location and the market that the property is situated in. And real estate is suitable for those investors who want to preserve their wealth or who wants to earn the rental income. Nowadays people are also investing in real estate through other mediums called REIT or real estate investment trust. So real estate investment trusts are basically companies that own office building, shopping malls, hotels, etc., and in return it gives to their investors the rental yield. Well, real estate investment trusts are basically the mutual fund but for real estate. Well, number 4 are commodities. So commodities refers to the raw material and natural resources that are traded globally. For example, gold, silver, crude oil. Well, commodities are considered as a moderate risky instrument because it depends upon a lot of external factors and situation, and people usually invest in commodities in order to hedge against inflation or maybe uncertain situation. Well, that is the main reason why we are seeing the prices of the gold shoot up in this current market, because we are facing a lot of uncertain situation because there are multiple wars going on and there are geopolitical tensions as well. But commodities are best for investors who want to save themselves from market downturns. So lastly, we move on to the cash and cash equivalents. So these types of investments are highly liquid, low risk investments which are easily accessible during emergencies. For example, savings account, treasury bills, liquid mutual funds, and these are low risk and low return investment, and they are typically suitable for the investors who are in constant need of cash. So smart investing basically means investing in all these asset classes on the basis of your risk tolerance, your financial goals and your investment horizon. And yeah, also don't forget to diversify between all these assets, because diversifying will obviously reduce your risk in long term. That is all with the today's video, guys, and if you want to learn more about finance, then you can check out my previous videos. I have put the link down below in the description. Till then, see ya, stay tuned.